This is the professor with your daily video watch list for Monday, May 22nd. Last week was a very volatile week with a lot of opinions being thrown around, and I've said quite often that you know opinions are really a lot like assholes. Everyone has one, and everyone thinks each other's stinks. So let me show you what happened here on the SPY. I want to talk about it. So we had a break below 2400 level, which still serves as a resistance area. And the minute that the SPY started to drop, you had a lot of people coming out of the woodwork on social media, saying, "I told you so." We're at a market top. Market's gonna get destroyed here now. Oh, you should have read so and so. Look on their website. And people have like things posted. Like this is the G4048 Thrustmaster Elliott Wave 3000 flux capacitor takedown. Uh, you know, um, you start getting into like people talking about uh, you know. Pitchfork analysis with the Hindenburg Omen scenarios, and really just a lot of, to be quite honest with you, a lot of malarkey. And I've said all along that your goal is you have to tune out all the noise, and you have to learn how to read the indexes, and you have to learn how to do some annotations yourself, and you have to learn how to look at a 30-minute view, a daily view, a weekly view, a monthly view on these indexes, and you have to look for patterns. You have to look for patterns, and you have to look for these measured moves, because these measured moves are self-fulfilling. They're very, very much like an if-then statement in computer programming. They're so reliable. They can almost be like a math equation, and I very much rely on these larger measured moves. Now, people that have been with me through, let's say who have followed me very closely for the last 3 years will tell you that where the SPY is concerned, we are almost accurately dead on to almost the point as to where it's going to go all of the time. I never want to get into a situation where I'm trying to predict time. Like I can easily say, well, it looks like we're in a measured move from point A to B, whether that move is up or down. But to me, the harder thing is the time. Like, well, when are we going to get there? Well, I don't know if it's going to be a week, or I don't know if it's going to be 3 months, or I don't know if it's going to be 6 or 9 months. But this is the measured move currently in play until you eradicate or kill that measured move. So nothing irritates me more than to read opinion and or to see somebody following someone else's opinion based on technical analysis and predictions and things like that. I can't stand that kind of stuff. It just drives me right up the wall. I don't want a prediction. I just want a chart showing a very mathematical progression of things that are likely to happen. And so let's look at the SPY here. There's a couple of things going on, and we had the resistance at 2400, and then the market dropped, and you had like I said, all these crazy crackheads coming out of the woodwork. And what ended up happening is the SPY ended up. Well, let's say this. Anybody who had stop losses in at the 20-day or 50-day moving average got taken out. There were probably a lot of market players that did have stops in at the 20 and the 50-day moving average, and they got taken out. And we could see that because the day that it happened, I was in the chat room, and I was doing some hand holding and some coaching, and I said, listen, the bullish setups are still in play. We're going to test the 50-day now because we're close to the 50-day. And this is what's going to happen. You're going to see an actual physical touch of the 50-day moving average. And you have to allow for some porosity, meaning you have to allow for an intraday move below the 50-day. And I would not even be surprised to see the 50-day breached because, there's two emotions in the market, right? There's fear and greed. And you also always see these emotions exacerbated and exaggerated. And we certainly saw that, as stops were taken out and there was some real fear and real panic in the market that hasn't been there in a long time. And so we actually even closed under the 50-day. And I told people in the chat room over and over again, I said, listen, I said, you need confirmation of this move now. You need a follow through day. Do not be surprised if we open up with a gap down and then we see positive price action tomorrow. You need to see confirmation of the move below the 50-day. And then the following day, when we did get the gap down, I told everybody in chat, this is what I expected. Now listen, the open does not matter at all. What matters today is the close. Well, the market rallied huge on Thursday, and then we had another really big rally on Friday. And what happened is, if you look, what I have here is a picture of the SPY, and what I did was I drew Fibonacci retracement lines, and you could see that the buy programs kicked in at the 61.8 Fibonacci retracement line. And whether you believe in Fibonacci or not, don't even get me going on that. The fact of the matter is that there are a lot of market players who do identify and believe in Fibonacci retracement lines. And many of those people may be programming some of these algos and buy patterns and incorporating these retracement levels into their dip buying strategies. And so you're sort of, it sort of becomes a self-fulfilling prophecy, and you saw that here. You saw a big move off of the 61.8 Fibonacci line, and the fact of the matter is you have this right here, and then you have this right here, okay, and then you have this right here. So we have a inverse head and shoulders pattern, and then you have, see if you can see it, an overall cup and handle pattern. Okay? And this throwback move to the 61.8 Fibonacci line, and then the subsequent 2-day, follow through, has kept all these plays intact. They have not been eradicated. So the three different measured moves that we've been talking about are still in play in the SPY. And I say this all the time, we don't have to have a big correction. People are really mistaken about that. They just don't get it. And these are new young puppies, to be quite frank. These are new young puppies that are in the market and have only been in the market since maybe 2009, 2013, and even later. And they just don't get it. You don't have to have a 6 to 8% correction. And I've said this, if I had a 20 for every time I've said this in chat or on the microphone, would I get on to talk with my members? If I had a $20 bill for every time I've said that you're seeing consolidation through time and through price action, this is exactly what's going on here. It's consolidation through time and through price action. And what you've gotten in the SPY now, because we've gone through, all of this, is you're getting into an oversold condition on the SPY with these bullish setups still in place. Okay, so right now we're range trading. This is range trading here, and with 4 bullish patterns in play, measured moves. Okay, measured moves, and so now we watch for 2 things. We watch for a break of the top. Okay, because we need to break the top of the range now for confirmation that the 4 bullish moves are going to play out. Okay, so we need to see that if we're going to get to 24.74 ultimately on the SPY. So now we're watching for that. Okay, on the flip side, we're watching for if this is going to break down. If this recent 2-day move is going to break down again, then you want to see a throwback to the 61.8 retracement line. And what you've got to see to eradicate these, what you have to see is you have to see a lower high and a lower low with volume, and then we've got to blow through this recent low right here. We've got to blow through it. And then what you're going to do then is you're going to, at that point, eradicate the moves that are in play here, and then you're going to look for a new bearish measured move. So, what's likely to happen in my opinion is this is what I'm looking for. So, because you're in this range and because you have sideways trading action where time and consolidation, um, where time and price, works off, time and price is working off, like I said, this overbought condition, and this kind of action that you see here, where you have where oversold conditions are close to triggering, and where you've got sideways price action. This kind of stuff is usually resolved to the upside, you guys. Okay, so it's important that you write this down in your trading journal and you begin to understand going forward, because many of you are very young and you're going to have a lot of years in this market. Consolidation through time more than price. So time more than price, consolidation through time more than the price itself, it's considered healthy. Okay, so we don't have to. You see so many people saying, "Well, we've got to go back down. This is enough." You don't have to. And what this evidence is telling you, that this is likely going to be resolved to the upside. So a couple red flags in my book is, even though the last 2 days were awesome, we haven't filled this gap here. Does everybody see this gap? So we want to at least get to here. So that's a bit of a negative. We fell just short of that. In my opinion, we want to fill that gap and then see what happens, okay? So again, because we're trading in this kind of consolidation, we want to look for a break of the upside with what has, been resistance, or we're looking for a break of the low, and we're looking for a new low on high volume. So now we need to see confirmation either way. It doesn't matter what I think we're going to do. All I can do is just base it on past history, and I'm saying, based on past history and based on the way the market has been trading this year thus far, you're seeing consolidation through time rather than drastic price, and that's healthy. That's just as healthy as if the market would have pulled back your 6, 8, or 10%, or whatever you want. Okay, and some of these tight trading ranges that you're seeing, are some of the tightest that the market has historically seen in 20 years. So again, next week also, now that we're past options expiration, next week and the end of May, going into the beginning of June, those periods seasonally and historically are much more bullish than the previous week that we just had, which this previous week historically and seasonally is usually a weak one. Okay? My personal opinion, I think more short-term caution, okay, is in order with longer-term optimism. Okay? What you've seen in this market recently has been some very narrow leadership. When you have narrow leadership like this, we start to use terms like a stock picker's market. And so, some stocks have gone up and have done well, and others have been absolutely ravaged. And when you have narrow leadership, it's hard to break out of a range that you're seeing here, because you need a lot of big market breadth, so that sectors are working together to break you out of a range one way or another. And so again, some short-term caution. Let's see if we fill the gap from last week, and I'm expecting, based on seasonal history, I'm expecting an optimistic or positive week next week. So let's take a look at some charts that are interesting for next week, and prepare ourselves. So obviously last week the China trade was on. You know that from last weekend's watch list video, I said to watch WB and SINA both very closely. Both are reporting earnings for the week. I expect earnings to be good, and you should see some plays fire off from those earnings. And so let's look at WB, and let's go to a weekly chart. So on a weekly chart, and remember, this stock was in our watch list video last weekend. So the stock was up 25% or almost 16 points. And Sina was the other stock, and that stock was up 18, almost 19 points, and it was up almost or over 22%. So both of those plays not only had earnings, which fundamentally make them two extremely strong stocks. Not only do they have that going for them, but the reason why the China trade was on last week is the president announced a $100 billion stimulus plan. And so I think you're going to continue to see follow through in China plays. And so my focus is going to be on WB. I like WB for higher prices. Obviously, the RSI is high, and the 4-day EMA, if you take a look at WB, is at 75. Sorry about that. Is at 75.91, and we closed at 78. So we're still $2.50 over the 4-day EMA. So this should be your support area here, or a support area. This one's been really strong, and I was glad that it was taking a little bit of a breather on Friday. I wanted to see that. Notice that it did hit a high of 82.28. The thing was just, crazy strong. I'm looking for WB over the longer term to go to triple digits. So now I'm looking for a move on this one over $100 a share over time. So WB is a stock that fundamentally and technically interests me. And now you have news also that acts as like a wind in the sails of China stocks, and that's the president announcing a $100 billion stimulus plan. So in my opinion, WB and Sina are two stocks that are both very much in play still and should remain in your watch lists. Another one is BITA, okay, and this one is very, very close to momentum, and it will likely come up in our scans very soon. And earnings and fundamentals have been strong for this one, and this is a China company, and you can see that it was up almost 6% on Friday, and the RSI is at 69 for the most part. But what grabs my attention here is the weekly chart, and so you can see right here, here is the left shoulder, and here is your head, and here is your right shoulder, and then within the right shoulder you have a play on top of a play. So you have a cup and handle pattern that we're trying to break out of here. And so and you have volume, and you have the president announcing a $100 billion stimulus plan. And so now and you have an RSI of 67 on the weekly chart. And so BITA is one of those China stocks that on the monthly it looks like we're getting a change of trend from a downtrend now to an uptrend as we try to break out of this bottoming consolidation channel that you see here. So this is another one that to me has some wind in its sails because of the China stimulus package, and at least to me, on a daily, weekly, monthly level, looks very interesting. Besides WB and SINA. Most of you know that I'm a big proponent of PED phenomenon, post-earnings announcement drift, and so you'll see me gravitate towards, I'm very much all about technical analysis, but I like to combine strong fundamentals with technical analysis, and so I tend to gravitate towards stocks that have had big earnings, uh, big earning beats, and who have guided higher for the coming quarter or even guided higher for the year. And so let's look at some companies with very strong fundamentals that look like they're going to that they look that they look to be providing some attractive entries here based on recent price action and market volatility. So we're going to move away from the China trade here, and let's take a look at LMAT. LMAT has been in our watch lists several times, and you can see that it recently had a huge bull stampede with tremendous volume, and then it has been in a descending wedge since that high on low volume. But now what I'm finding attractive is if you go down and look at the slow stochastic. The slow stow is at 11, and so in my opinion, this is a stock that's looking very oversold here, and the RSI is still in what we would define as an uptrend. And so while we've had a big pullback from 33, we look at the 4-day EMA. It's $30 and a penny, and we're under the 4-day EMA. So there's two things that you can do. I don't suggest front loading this, though you can certainly do that. What I would rather see you do is I would rather you wait for, put this in your watch list, and you're waiting for this slow stochastic to curl up and move through the 20, and you're also looking for price action to move over whatever the 4-day EMA is. Once you have those two things, because this stock is so strong fundamentally and their most recent earnings were fantastic, this is a stock where the slow stow play can pay for you, okay, and work well for you. So again, rather than front load and try to get a great price, because there are so many stocks in our watch list and we're pretty active, we look for two things: the slow stochastic to come over the 20, and we want price action to go over the 4-day EMA, which puts LMAT on our radars. Another stock that I want you to take a look at is Marriott Vacation Club worldwide. It recently hit a high of 124.94 and is currently just shy of 111. This is a stock with very strong fundamentals and who had good earnings. Note the 4-day EMA is 111.13, and we're under that 4-day EMA. But now I want you to note again the slow stochastic. In this case, the slow stochastic is at 6. And so it's extremely oversold, and we're still seeing an RSI that is telling us it's starting to curl, and we have an RSI that's starting to let us know that we're still in an uptrend area. And this was another stock with such strong fundamentals that because it is oversold, it might be it's offering an attractive opportunity for the investor and or trader. Okay, so just taking a quick look at the weekly chart to see what we have here. So we hit that high, and then you're having 2 weeks of rest, very similar to the 2 days of rest that you see after a momentum play. Okay, you tend to see the same thing in the weeklies, just so that you know. And let's go down and take a look at our MACD. Okay, so you can see that the stock has been under pressure, and we've had some distribution days. The MAC histogram is negative, so I'd really like to see that one get positive. And again, just like on LMAT, you don't really want to try to front load this. You want to look for two things. You want to look for the slow stochastic to curl and then go up over the 20. And then we also want to see the price action get over this 4-day EMA, whatever that may be. Okay, So LMAT and VAC make the watch list along with WB, SINA, and BITA. Okay, a couple other stocks, or one other stock, two other stocks that I like that had very strong earnings. I believe TTD is still in the watch list. I really like this one. I would like to have a position and swing trade this over a longer period of time. I think it's going much higher myself. I see this one going 70 to 75. And you can see that it's a 2016 IPO. And so TTD, we closed at $50.07, and the 4-day EMA is at 50. So actually TTD is a buy here. Okay, you can buy right away, and your risk versus reward is clearly defined for you already, correct? Okay, so at the very least, you know where your stop is, and you know what you'd like to see the stock. You'd like to see the stock break out and see follow through over 54.50 to continue the much larger trend. Okay, so TTD, fantastic earnings, great growth stock, and so another stock that's already in the watch list but deserves honorable mention. Another stock that I like that is very close to breaking out. And it's probably easier to see on the daily. And I'm just going to draw this rather than annotate it. So what you have on FONR is a very large cup and handle play. And what you want to see is a break over 2390, and we're very close. So a break over 2390 sets off a much larger move. You look at the bottom of the cup is 1570, and the top of the cup is 2390, and so that's an $8.20 move, correct? And what you do is you take that depth of the cup, $8.20, the difference between the bottom of the cup and the top of the cup, and you add 820 to 2390, which gives you what, 32.10 or something like that, like a measured move to $32.10. So this is a if I remember correctly, this is a stand-up imaging stock. Again, extremely strong earnings and fundamentals. And so these are the stocks that I tend to gravitate towards when they come up in my scans, or you're starting to see like a very typical chart pattern get ready to trigger. When one of these things happens in a very fundamentally strong stock, I take it very seriously, as opposed to seeing it maybe trigger in many other kinds of stocks. Okay. And lastly, a couple of stocks. VRNS is another one that's already in my watch list. But what you had with VRNS that I like is you had a recent top at 36.95. I'm sorry, 36.95. We closed at 35.95, and the 4-day EMA is 35.67. Your risk versus reward is clearly defined here. So you have an RSI that at 70 again, and this is an ascending base. And so we tend to see ascending bases once it's broke. If we can break 36.95, they usually resolve to the upside. Or I'm sorry, that's not true. They usually resolve to, they're known as continuation plays, and they usually resolve in the direction of whatever direction the stock was going in at the time. I like the recent volume and change in ATR on VRNS. And if we go to the weekly on VRNS and take a look, you have what looks to be a very tight ascending base following the recent breakout. And you know how I feel about these types of setups. and note the volume on 2 of the last 3 weeks. And you've got a doji. So this stock held up pretty well in a week that was extremely valuable, right? Volatile. So we saw, because we've talked about this last week, we saw a bull trap and a breakdown from the top again from that 2400 area, and then we saw a bear trap at 61.8 Fibonacci area, just under the 50-day, and the market hasn't looked back since. And so, again, we're seeing market consolidation through time rather than price. And I think this market's going to resolve to the upside. I expect the next couple of weeks to be positive, to be honest with you. But VRNS was one that held up quite well, and it was one of my favorite patterns in the watch list besides TCMD, which, like an idiot, I didn't take this trade. I'm still not sure why, because I would have made about 3 points off of the trade so far. It's worked out quite well. I was gravitating towards this play visually, and just didn't take it. And one more stock that makes the watch list here, EIDO, which is an ETF that concentrates on Indonesia. You don't have momentum here yet, but what I do like is you have great price action here with more room, nice room to the upside from where the stock currently resides. If you can break, if you can continue the momentum that is taking place with this stock, you should have a move at least through to $32 and change. So this one looks pretty good to me, and makes the watch list. So we talked about in this daily watch list video, we talked about and reviewed the action on the SPY last week, and technically what that means for us and what that was all about. Hopefully that was very clear to you and easy to see. And then we talked about the China trade that is on, and from the president announcing a $100 billion stimulus plan. And then we looked at a couple of Chinese plays that were in the watch list from last weekend that have fired off of fantastic earnings, WB and Sina, SINA, and we also brought up BITA. And then we looked at some very fundamentally strong stocks that had great earnings that are allowing attractive entries, or the possibility of an attractive entry. And that's LMAT, LMAT, Marriott, VAC. We talked about FONR and TTD. Four very fundamentally strong stocks that look good for entry. And then lastly, we talked about VRNS and EIDO. So this has been your daily video watch list for Monday, May 22nd, and I will see everybody bright and early in the chat room tomorrow.